Okay. Oops. Mic drop. Okay, folks, welcome to Sunday Night Futures Live. This is where we review the opening price action of the brand new trading week. We have the E-minis up, the S&P 500 index futures, and we are trading up on the week 0.03%. Let's see whether we could do a breakout of yeah, they're going to try to break this out. So you have a 15-minute bull flag set up, and we'll set up an alert to see what happens in a few minutes. Do we break out or do we fade? Okay. We have a lot to talk about today, folks. We have a lot to talk about in terms of markers of a bubble. And this is not going to be doom and gloom. I have some positive observations about the market to go over. We did add to longs last week. We reduced our short position because it wasn't working. So we reduced it, raised capital, added more longs, and we'll see what the week brings. Do we make, it's simple as this, do we make higher highs? Simple as that. Or do we double top and do we break down to new lower lows? That'll cause us to reestablish our short position. We have tight stops on our longs, and we'll go net short the market. Right now, I don't think you could fight it. NQ, this is the NASDAQ 100, the futures version of the triple Qs. And they're going to try to break this out as well. That's a sloppy bull flag setup, but you know what? Good enough for government work. So if we take out this alert here, that's a new daily higher high. Take note in this 1 hour chart how we had put in the top back here on the 22nd, pulled back, double bottom set up a platform from which to break out and move up higher, which we're doing now. The question is, do we break out or do we break down? Simple as that. No other questions to be had here. We can keep it really, really simple. Let's check in with the small caps. Small caps up 0.03%. Mid caps, they are up as well. So at the open here, everything is up fractionally. No one sector is outshining the other one. That leads me to believe that bond yields may be flat to weak. Yeah. So we have bond yields. The 10-year yield is down at current 0.24%. That will allow for NQ turn negative. Now it's flat on the session. Volatility, nothing happening here really. It's a move up higher. This is a 4 hour chart. We use a 4 hour chart because it's just so volatile. You don't want to look at a 15-minute chart. Too much volatility, too many head fakes. So volatility up, but no established trend here whatsoever except to the downside. We're getting a bit of a rejection here. That NASDAQ breakout is losing momentum. Very light volume. Okay. Let's let things settle down. I hope everybody had a great weekend. Tragedy, I believe it's over in Michigan. Horrible, another shooting at a church. My prayers to those folks that are victimized again. Mr. Pete, welcome. Enoch, welcome. Sean, good evening to you. George from Quebec, good evening to you, sir. Franklin, hey, brother. Talon, thank you for the audio check. Always appreciated. Disaffected Canadian. We have two Canadians on. What's going on with our ostriches? I'm sure most people don't know what the heck I'm talking about, but they have a real standoff up in Canada. The government wants to kill ostriches. It's crazy. They seized an ostrich farm. You're very welcome. You're very welcome. I wish I didn't have to do it. It's terrible. Okay, so we've stabilized here. We're flat on the NQ. Let's take a look at the currency markets. The dollar put in an explosive Thursday and Friday. Yeah, correct me if I'm wrong. There's a Supreme Court stay on the execution of the birds, but they also seized the farms. So even the owners can't take care of the birds, and they're flying aircraft, helicopters, and drones above the farm. And you have these ostriches that are panicking. They're running into fences, breaking their legs, getting hurt. It's really disgusting behavior on the part of the government. I don't know what the heck is going on in Canada, man, but holy Christ. Talk about need for regime change. You guys need a quick election. That's really bad. All right, anyway. Dollar. Trading up at current. Now, on the week last week, this is a pretty good candlestick. 2 up weeks. And this comes after the Federal Reserve cut rates. Think about it. So it looks as though some of the pricing of the dollar was priced into the rate cuts, and now you're seeing a buy the news event on the dollar. Not huge. I don't think it's going to last, but dollar looking okay. Let's check in with the other foreign currencies. British pound. Britain is in big trouble. They have a real crisis going on over there. It's not published in our mainstream media. You're not going to find anything about it in our mainstream media. You need to go to Twitter, X, whatever you want to call it, Truth Social, alternative media. They're in turmoil over in England. They're going to need snap elections soon. They're even talking about King Charles dissolving Parliament. And this is not having a good effect on the British pound, which is appears to be putting in a double top, a break below 1.31. That's a confirmation breakdown on the British pound, and you could expect to see shorts move in for the kill if that occurs. So British pound in big trouble. Crisis of confidence. Here's a Canadian dollar. Not doing all that much better. Euro, which had been doing well, is still doing well. It's consolidating, behaving well against the U.S. dollar. The Japanese yen, which just can't seem to hold a rally, has just been vacillating here since March. Hasn't done anything, even though they're increasing rates over there, unless they paused. The Japanese yen has gone nowhere. It sounds that way. Yeah, it sounds very similar to what we were doing under the Biden administration. It's the same thing with Britain, France, to a lesser extent, Italy. But Giorgia Meloni has her hands tied by the Supreme Court over there. October 2nd is when the stay ends, I think. Yeah. It's so crazy how they want to kill those birds. I mean, really insane. So for those not familiar, it's so insane what they're doing up in Canada with these ostriches. They're concerned about bird flu. There's a bird flu outbreak back in February. A few birds died. They went through the court system trying to save the flock. The birds have been healthy ever since. So they have stated that if they dare give one of those birds a blood test for bird flu, 200, I think, correct me if I'm wrong here, 20 or $200,000 fine and or 6 months imprisonment per bird, per test. So they'd rather kill them. It's really, we live in really interesting times. So that's the currency market. Dollar stable, British pound in trouble, Canadian dollar weak, Japanese dollar doing nothing, and the euro looks poised for a continuation move up higher. Carney is yes. Is he even Canadian? I thought he was over in Britain. I thought he was British. I guess he has to be. We are working our way with World Economic Forum in the U.S. still. I'm sure they're still pulling the strings behind the scenes. I'm sure. You hear Gates out there again, along with Larry Ellison out of Oracle, talking about the digital ID. They're dying for that digital ID. They can't wait because that's the end of freedom. It's done. Digital currency, digital everything, you're done. Freedom, gone. Let's talk about energy. Let's go back to the 15-minute chart to get a vibe for how we're opening up here. 15-minute chart. I want to begin with oil. I hope oil is down. And I'll go over a chart. It is down 1% at current. This is very, very good news for bulls. And you may be saying, why is that possibly good news? Stick around. Stick around. I have good news for oil bulls, even though oil is down. Natural gas. Natural gas had a strong Thursday. They had the nat gas inventory report on Thursday. We're pulling back 1.5%. That's not a big move for natural gas. What else do you want to take a look at in the energy space? Gasoline prices, while at the lower end of their trading range, at the pump, prices are going up, even though gasoline is at the lower end of the trading range. So we're not seeing the spot market carry through to the pump. Here's RBOB. Gasoline gapping down. Oh, this is a new contract. That's why. It's a new contract. So it's showing down 0.73%. I never know how to reconcile these, so I'm not going to pretend that I do. Let's take a look at the precious metal space. Gold down at current, but coming off of its lows. Gold hitting all-time highs last week. On an intraday view, this is a double top and a confirmed breakdown. Double top right here, here, and here. 3,800 is now resistance. Let's see if we can close back above that. It's only a 15-minute chart. Okay. Let's take a look at silver. Silver down as well, but coming off of its lows. They're buying the dips here. Platinum on a tear here. Platinum up 1%. Let's go to the weekly view for platinum. Look at this chart. Look at this chart. Look at this consolidation. Look at the breakout. There's nothing not to like here. Back to the 15-minute view. Let's check out PA, of which we are long. We own silver, gold, and palladium. Palladium down 0.12%. Let's check out the weekly view. So we're tapping the upper band of a rising uptrend channel. This used to be the lower band of support. Now it's the upper band of resistance. So we're going to continue to grind it out higher here. Still bullish on palladium. Back to the 15-minute view. Now, over the weekend, we had a bounce back on crypto. XRP now up 1.73%. Let's check out Bitcoin. Bitcoin now up 2.22%. Huge open here. This is basically a makeup session because we were up today and up yesterday, down on Friday. So all this is just a repricing of XRP and Bitcoin. Looks more bullish than what it actually is. Live cattle. This is a 15-minute chart. Looks pretty bullish. Inverted head and shoulders setup. But with commodities, we like to use the weekly chart. Oh, wow. Look at a bearish reversal bar on live cattle. Look at this bull run. Pardon the pun. Pun intended. If we break down here, live cattle could become a short. Let's check in with other commodities. In particular, I want to take a look at soybeans. The Chinese are now moving their supply chain from the U.S. to Brazil for soybeans. So this is a train wreck. I would avoid soybeans. Looks like it wants to go lower. Wheat, struggling here at best. And lastly, corn. Not much to talk about here. I mean, these charts are doing absolutely nothing. Okay. Let's go to comments, and we will get to Social Security checks no more, going digital this week. Is that a fact? Direct deposit, I guess, right? Yeah, I knew he had some sort of position. So it probably has something to do with it being a Commonwealth. He has Canadian, but he was the UK Chancellor, a finance minister for a while. Okay. Hey, Paul, welcome. Switzerland just voted for digital ID today. It's already starting. Well, Shiny 7? I don't know what that is. That's a sports reference. I'm not into team sports. I'm not exactly sure what that means. All right. Let's get to it. Let's talk about what's coming out this week as we normally would. But first, I want to talk about there's a saying that in the stock market, bad news is good news is bad news, as sick and perverse as that is. So on Thursday, we got GDP reports, the third estimate. So usually you don't see a big change in a third estimate, but this time you had a big change. So GDP, and I want you to keep this in mind, GDP is running at a 3 handle. On average, the United States grows at a 2 handle. They're cutting rates at a 3 handle on GDP. Okay. So not only are we running at a 3 handle, we're nearly running at 4% GDP, and they're cutting interest rates. NASDAQ just broke out that 15-minute bull flag just played out. Let's see if they have the algos running in here. So we have new higher highs relative to Friday. Yeah. Now what we're going to be looking for is as to whether or not we're able to take out the highs of the 22nd or 20th. I think it's the 22nd, those highs. Okay. So, Jesus, a lot of alerts firing off here. ES is following through as well. So ES and the NASDAQ 100 trading up, session highs, new highs relative to Friday. Fast forward to Friday's data. We had the PCE report. This allowed the markets to drive up higher. So it's still nearly 3%, nowhere near the 2% mandate or the goal. I shouldn't say mandate, the goal of the Federal Reserve. So why are we cutting interest rates? I have no idea why. No idea. So what are we looking forward to this coming week? We have nothing tomorrow, just a bunch of Fed heads, job openings. This is the JOLTS number that comes out on Tuesday. Consumer confidence, important number. Wednesday, it's a jobs week, folks. ADP employment report kicks off on Wednesday. Factory orders on Thursday, plus initial jobless claims. And, of course, the pimp Mac daddy of them all, non-farm payrolls on Friday. They're expecting only 45,000 jobs. That's nothing. That's absolutely nothing. If that's the only reason they could point to say you need a rate cut. So they did rate cuts 2 weeks ago. What did longer term yields do? Just as they did a year ago, they went up. So yields since the first rate cut in a year 2 weeks ago are now higher. Exactly what the Fed didn't want, exactly what the president doesn't want. It's happening. Bond yields are moving up. Does this trend continue? I'm not sure. But the only way, if it does continue, for the Federal Reserve to stop longer term yields from going up, they got to step into the bond market, and they need to be net buyers, just as they were during the financial crisis, during COVID, and during the regional bank blow up March of 2023. So they're coming back. It's just a matter of when. Now, earnings season begins. You had CarMax that came out. It is absolutely destroyed. I was going to talk more about that. I'm probably going to do a video analysis on CarMax. I happen to like it. That's the only reason why I'm going to do the video. So while everybody is doom and gloomish on CarMax, I'm going to do exactly what we did with UNH, with Boeing, with CNC, Centene Corp. All of them got hammered over their head. What do? We stepped in and bought them, and now they're long-term core positions for us. So this coming week, we get Carnival that comes out on Monday. Not much here. Acuity. No, I think it was Accenture. Accenture announced 11,000 layoffs, more to come over the weekend. ConAgra reports Cal-Maine Foods, the largest egg producer in the United States. We used to own them. NovaGold comes out this week. Schiller PE ratio, 39.84. We hit a 40 handle early last week. We closed above it for the first time since 2000, but this is a weekly chart. We did not close the week out above a 40 handle. I think we're going to get it this week. Buffett indicator, we remain strongly overvalued going into the new trading week. Here's the chart. It should scare you. So this just reinforces my earlier statement about lightening up on shorts, buying some longs. It's fine to do that, even with the Buffett indicator at these highs. But if you're not using a stop loss order and you think that it's different this time, you're going to fall victim to just as many have fallen victim to that mentality as they did back during COVID, back during the financial crisis, back during the dot-com bubble. It's never different. The price is expensive for this market. The thing is that when you take a look at the Shiller PE ratio, and you look back here during this time frame that we were trading above a 40 handle back in 2000, it looks like only a brief amount of time. In reality, it was about 400 days. That's the reality. So that's why you could still be long of the market. Just understand when you need to get out. Tighten up those stops. Use a trailing stop loss order. Let the market take you out. Have cash at the ready. Look to short when time to look short. When it looks as though the time to short is the path of least resistance. Okay, you want to trade along that line of the path of least resistance. Right now, the path of least resistance is to the upside. I speculated along to the short side. Didn't work out. We lightened up on half of it. Bought more stocks. I'm going to go over one chart in a moment that we bought up on it, up about nearly 9% on it in the past week alone. It's a leverage product. So just be forewarned in advance. If you want those types of returns, you're going to have to take on some additional risk. All right, so Buffett indicated this is unsustainable. But in the right here, the right now, we trade the market that we have, not the one that we want. Simple as that. So in preparing for this week's show, I did a lot of research, and I started listening to some podcasts, and I just kept saying, wow, all these things sound familiar to me that are occurring all around the same time. And so I found examples. I'm going to share them with you. And there's many people out there that don't believe that you understand or you can tell when a bubble is going to burst. That's inaccurate. That's completely inaccurate. Bubbles are made by those that are just delusional, and they don't want to believe that this is for real. This is the new nirvana, and stocks can never go down. They can, and they will go down. It's just a matter of when. And I pulled up this clip from The Big Short, which pretty much puts into words more articulately than I could put my opinions. Here you go. Oh, let me make sure I am sharing my audio. I don't think I was sharing my audio. There we go. Let's play it.
Why? Anyone can see that there's a real estate bubble.
Actually, no one can see a bubble. That's what makes it a bubble.
That's dumb, Lawrence. It's always markers. Mortgage fraud was quintupled since 2000, and the average take-home pay is flat, but home prices are soaring. That means the homes are debt, not assets.
Okay, so do we have markers? Well, take-home pay is flat. Really, adjusted for inflation, is flat, if not going negative in certain situations, certain segments of the economy. And then you take a look at Tricolor lending. And this is just one of two major auto lenders that have now filed for Chapter 7 bankruptcy. You saw the results of CarMax last week. I mean, this is just abysmal. But we will be looking to buy CarMax in the next week or two as a trade, not as an investment. And I will be doing a video on it. So here is CarMax. Let's go to a monthly chart so you can appreciate where we're at. And now people want to think that CarMax just broke down last week. No. CarMax has been in a bear market for quite a while. And now you're just entering the crescendo phase. It's down, peak to trough, down 73% from its highs. And it's going lower. So we're going to be looking to buy CarMax for a counter trend rally. Then we are going to look to exit. Then we're going to watch it again. But this time, we're going to be using a monthly chart, weekly charts to identify, okay, have we stopped going down? Have we taken out prior lows? And if we haven't taken out those prior lows and we've now found stability at historical support, well, then what we're going to do is we're going to begin to put on a bullish trade. The problem is I don't want to get too big because there's no dividend here. You're not getting paid to wait. So that's the unfortunate thing. But the same can be said for Boeing. Boeing doesn't pay a dividend either. I just knew that Boeing was just so hated. The news couldn't get any worse for Boeing. And that's why I decided to step in, and we called that right. UNH was very, very cheap, very, very profitable. It just got horrible headlines, and plus it was paying a dividend. So we bought UNH, we bought CNC, and we're doing well. So CarMax. So you have the fraud that's out here. The bank is working to secure and consolidate its vehicle collateral. Their vehicle collateral that they have, they use as collateral duplicate times. So they went to JP Morgan Chase and other banks saying, here's our collateral. We need a line of credit. But they use the same collateral for different lines of credit. That's kind of illegal. So they have $6 billion in assets. It's not a huge number in terms of banking, but there's more. Somebody's got exposure to this. I know JP Morgan is one of them. Fifth Third Bancorp, another creditor to Tricolor's bankruptcy, logged a $200 million loss on a loan connected with the auto lender. Fifth Third CEO Tim Spence chalked it up Wednesday to significant fraud. So here's your fraud. So like Marco Burry said, you have fraud. Check that box. Wages not going anywhere but down. Check that box. And there's more. I just love this headline. The AI bubble the AI bubble is the only thing keeping the U.S. economy together, Deutsche Brothers warns. When the bubble bursts, reality will hit hard, far harder than anyone expects. Very, very true. And what NVIDIA is doing and what Oracle are doing with their vendor financing with ChatGPT, they're going to look back on these vendor financing agreements in hindsight. I'll be talking about it. I'll be one of those guys saying, I told you so. I warned you. On September the 28th, I warned about the fraud that's being uncovered in the banking sector. I warned about the accounting, and I won't say irregularities, the pricing that is being done over at NVIDIA with their vendor financing, along with Oracle. Oracle's debt to equity ratio is over 500%. So, there's only so, let me just read this out to you. There's only so much of this that can occur before the street starts saying there's no real profits here. It's just here. Do I have it here? Here. Essentially, this is the new business model. The scary part is that this is accurate at some of these companies. And if NVIDIA goes, it's all over. Securing a $60 billion deal with OpenAI would require even more massive debt for Oracle, which already has a debt-to-equity ratio above 500%. By comparison, peers like Amazon, Microsoft have ratios of 50% and 30%, according to JP Morgan. This is absolutely insane. And this coming from the guy, Larry Ellison, that now wants digital IDs along with Bill Gates. So, warning flag on the track. So let's talk a little bit about the health of the market. When we talk about health, and I titled this, do we have sector rotation perhaps? And this is a chart here in red and black of advances versus decliners. Now, the bullish case here is that this is a monthly chart. We have 2 trading days left to go. A lot can happen, but as it stands right now, we look poised to break out to new higher highs while we're putting in a downtrend. So what this means is that you have more advancers than you do decliners. You're relying less upon Mag 7 and you're relying more upon other NASDAQ stocks. The problem is they're not as profitable as Mag 7. So how much legs do they have that they can keep carrying this market up higher? The NASDAQ and the Mag 7 names, they were in orderly uptrend channels. They have now gone parabolic, and they could stay parabolic. I'm not in the camp that believes that there's no way that we don't have one last surge up higher here for a crescendo rally, and that could be a 10, 15, 20% move from where we're at current. So that's the reality of the market. You know, I've been in these bubbles before, and just when you think they can't go up any higher, they do. Now, the problem for the NASDAQ 100 is that we hit all-time record highs only a few days ago. This is a monthly chart. Of the 100 NDX or NASDAQ 100 names, triple Q names, only 47 of them are trading above their 50-day moving average. That is very bad. At one point in time last week, we were down at 40 to 41. 2 weeks ago, we were down with a 30 handle, and we bounced back. So this is not good. So the triple Qs are in a very, very dangerous place here. Now, can they pull it out? Can they rally the troops and get them all moving up higher? Sure, of course they can. But right now, at this snapshot in time, this should be concerning to everybody that the one of the most relevant groups of our times related to AI only has 50 names out of the 100 trading above their 50-day moving average. Now, the thing to keep in mind is that in this bucket, you have names like Starbucks. For context, obviously not an AI play. Obviously trading down below the 50-day moving average. So this is not all tech stocks. A lot of it is consumer related that is dragging the sector down lower. So continuing on with, can this rally continue? There is $7.7 trillion sitting in money market accounts, folks. That's liquidity. So if you only get 20% of that finding its way into the equity markets, well, it's going up higher. So there's still fuel on the sidelines that can still get injected into this market, causing it to press up higher. Now, the other thing that is both, it's net bearish, is that you have the number of calls, trading and call options at another record. This is just absolutely insane. I mean, here's 2000, and you want to talk about a speculative mania back then, and I was trading options back then. We've dwarfed that. This is a 10x move higher in the use of call options as the vehicle of choice. Now, I believe a lot of this has to do with zero DTE options, which I think are going to shock this market one day. I think that it's absolute insanity that people are trading zero DTE options. I don't think I've ever put out an alert to one of my members about zero DTE options. I think it's insanity. I think it's insanity. But it's there. So this is a picture of the speculative mania that we have in this market right now. This is retail money flows. And the reason why this drives the markets up higher is that pretend that you're an options moneymaker. So you sell a guy an option, you need to hedge that position. So if you're selling a guy 10 contracts on Microsoft, well, you need to go into the open market and you need to buy an equivalent amount of Microsoft stock to help balance out your book. Because if you don't, and Microsoft goes up higher, well, you're going to have your face ripped off. So that's what's one of the other primary reasons causing the stock market to move up higher. Pure and rampant speculation and forced buying by money market makers. I think I said money makers before. market makers. Other signals that are out there in the market that all is not right. You know, if this AI mania, where is it? Here. If this comes true, we already have signals in the Dow Jones U.S. Containers and Packaging Index. Now, I spoke about this probably about a month or so ago, and ever since then, it's done nothing but deteriorate. So this is significant. Think about what this measures. Containers and packaging, that's trade. And we are breaking down. For the month of September, we're down nearly 6.5%. This is a lower high. If we break below 365 and close there, that's a new bear market on this sector, and it's not good for the overall economy. Now, while we've been screaming, I have been screaming for years now about buying the gold mining stocks and the silver mining stocks, of which we own. We did book some profits a couple of weeks ago. And when you take a look at this chart now, this is a ratio chart of the Dow Jones U.S. mining index relative to the S&P 500. And you could see that this is, again, a monthly chart, that the mining sector is vastly outperforming the S&P 500 by a mile. On the year, the Dow Jones mining index is outperforming the S&P 500 by nearly 101%. So we were buying these when nobody wanted them. Nobody wanted them. And we were building positions for the past couple of years. Now we're enjoying the fruits of our labor. So one of the other areas that we began bull operations on last week was with the Dow Jones, I shouldn't say the Dow Jones, UTSL, Leveraged Product, Direxion Family. We went long of the utilities. The utilities are on a tear, moving up higher. And normally, utilities, when yields move up higher, they go lower. But not now, because the demand for energy is such that the utilities have pricing power. So even though for the past year, yields on a long-term basis, 10-year, 20-year, 30-year, have gone up, we've only had one down month in the Dow Jones utility space. So we bought the UTSL last week, and we're up just shy of 9%. This is the monthly chart of UTSL. Beautiful monthly chart. Let's go to the weekly chart. Look at that weekly breakout. Beautiful. So the utility space doing very, very well. So we took some of our short off, and we put it into the utility space. We'll remain long, trailing stop loss order on it, and we'll let the markets take us out if everything starts to go downhill. Now, earlier, we went over the opening price action of crude oil. It was down 1%, and I said, that's a good thing. Why would that be a good thing? The reason is that this is the chart of light sweet crude, weekly time frame. What did we do last week? We broke out. So what are we going to do tomorrow morning? We're probably going to be tapping this lower band of support. What are we probably going to be doing? When everybody else is panicking, we will be buying. We'll be buying probably a leveraged product, maybe USO, but oil is looking very, very good. Longer term. This is not a short-term trade. This is a longer-term trade. And we also want to keep an eye on commodities. CRB Commodity Index. I've gone over this in the past, and we had broken out several weeks ago. Last week, a big reversal bar, closing up 2%. I think we're breaking out higher here. I think that energy is going to lead the charge, and the fear of inflation is going to rise, and that could be a problem for Fed rate cuts moving forward. So if you're worried about what the canary in the coal mine could be for this market, look no further than the CRB Commodity Index led by oil if it continues up higher. Let's go to comments. Okay. I guess I missed something. All right. Thanks for that, Franklin. Hello, Scott. Open door stock looks very promising. Trades is open. I've heard about it. Well, I think they're going to be making Fannie and Freddie public again. Okay. Michael, do you think CEO of NVIDIA is a crook coming out and saying $100 billion? I won't say he's a crook. I'm sure he's running his business, man. I think that he sees that he's losing China, and he's doing what he needs to do. I'm not saying it's right, but I'm sure he'd get his hand slapped if it was illegal. The data for jobs revisions has been bad. The data for GDP has been good. It's been a mixed bag. But the jobs number is clearly the only hook the Federal Reserve can hang its hat on for cutting interest rates. Okay, let's do some chart requests, and we will call it a night. Folks, this is going to be brought to you by TrendSpider Automated Technical Analysis. I did a video yesterday about their new functionality here called Sidekick, and I entered a script to run the IBD top 50 stocks, most profitable stocks, and it pumped out a few selections. One I didn't like, two I did like. I did a video on it. It's on YouTube if you want to go check that out. All right, let's see what the requests are. All right. We have Sean with XOM, Manny, DEO, George, Clean, CLNE, Mark, Hims, Franklin, JPM. All right, let's do it. Okay, this is only a 30-minute chart. Let's pull back from this. Wow. Really good week last week on XOM. The energy stocks in general did really well last week. I think this is a buy on any pullback. I really like this breakout. This has been really rough for XOM to get through. We're finally above it. I'm bullish here on XOM. Let's see if we have any overhead supply issues above. Let's overlay the automated trend lines, and we do. So this is the algorithm, folks, not me. Overhead supply right at about 122, then 125, then this is going to be the big one here. You have two coinciding together around 128.70 per share on XOM, but it's looking good at current. Any pullback, I think, could be bought here. Daily view. You're going to have a bit of resistance right up here at about 120. I would buy a pullback on XOM. Bullish. DEO. Diageo. This is just one of those stocks that should be doing good. I got to tell you, I love the chart. Yielding 5.29%. This is a classic contrarian trade here. The knee-jerk reaction, obviously, most people are going to get is don't even touch this thing. I kind of like it. I think you're gonna get a rally here. You're at Fibonacci. Well, not quite. We blew through it. We have Fibonacci support down at 91.74. Let's take a look at the daily chart. Daily chart. We broke support on the 25th. You show me $91.85 on DEO, I'm a buyer. We're going to add this to our watch list. And we'll keep this active for 30 days. All right, so our alert is set. I like this chart. I think it's going to be good for a short-term swing trade, a nice rip your face off rally, probably similar to back here and back here. The question is that when you get that pullback to do a retest of prior lows, does it hold? And that's the $100,000 question. So we would be sellers of any rally into resistance and then look to buy it back on a higher low or at a double bottom setup. So I like this stock. I would have to check out valuations before I entered it, but I'm very interested in it. I like the dividends. You're getting paid to wait. Here's a 4-hour view. Very close to a buy signal. Very, very close. CLNE. Weekly view. So I wouldn't initiate a new trade here. We were stopped last week at a resistance level. It may vacillate in between these two resistance levels. The support level at current is at $2.83. Critical supports at $2.38. Daily chart. The daily chart looks good here. Friday was a very, very good day. So I'm not going to be the least bit surprised to see this thing move up higher. Very good day. How is our volume? Volume on Friday was okay, not great. So CLNE looks interesting. I wouldn't put on a new trade here because of weekly resistance. Why did that change? Why did that change? I may have had the wrong setting on here. I just went back to the weekly chart, and I like the setup here quite a bit. I need to literally go back and check the video on this one of what I clicked because this changed entirely. Very nice setup here. We broke out 2 weeks ago, retest last week, follow through. Bullish chart daily, bullish chart weekly. So CLNE looking very, very good to the long end. HIMS. HIMS, really nice bounce back here off of that sell-off in the summer. It looks good. I mean, last week they tried to take it down. They rallied it back positive. That's a bullish reversal bar. That's good stuff. Volume could have been better. Daily chart looks like they're taking this up higher. Bullish on HIMS. I think it's going up. JPM. Trailing stop loss order time, to be honest with you. I wouldn't initiate a new trade here. The rally's begun. It can continue up higher. I certainly wouldn't sell it, but trailing stop loss order, and I would let the market take me out at the best possible price. So JP Morgan, I would expect higher highs. I wouldn't be surprised if it just said, you know what, no mas here. We really stopped. We've stalled here at around 316 per share. So I would just be careful. Maybe tighten up your stops a little bit. Maybe down at 307 per share. Put a stop in there or a trailing stop and let the market take you out. All right, let's go to comments and say goodnight to everybody. No Jody tonight. You're welcome, Sean. I'm rotating to a bunch of consumer staples. Yeah, staples got beat up last week. They did have a bounce back on Friday. Here's XLP. It's a daily chart. There's the bounce back. Really rough past few weeks for the staples. Okay. Good info. Okay. You're welcome, Franklin. Anytime, pal. Have a good weekend. George, you're welcome as well. Folks, have a great Sunday night. Don't forget TrendSpy to get 30. Actually, they're doing a 45% sale right now. Use my link below on YouTube, link above on Twitter and Facebook. Get 45% off of TrendSpider. And everybody have a profitable trading week. I'll talk to you soon. Be well.